Hi, everybody, and welcome to the weekly market wrap for February 2nd, 2018. I'm a little under the weather today, but I'm trying to make it through this with about a half a voice here. One of the big things that we were able to get this week was a pretty big pullback. In fact, it was the worst week since the Brexit back in 2016. So if you're looking at the chart here, this is a weekly chart of the ETF that represents the S&P 500. And you'll see that we made it all the way back after the highs of last week, back down to the week of January 16th. So, from a time perspective, because we had such a big January increase in market value, we're really only pulling back so far about a little less than half of the move. I think we gave back about 3 to 4% so far of the 7% increase. So, the market right now, from for year to date, I should say, is up about 3.3%. And just after hours, we had some more bad news come out of Wells Fargo, or out of the Fed, I should say, that they were going to stop Wells Fargo from growing because they had such bad compliance issues. So that has Wells Fargo down, as I'm looking at it here, about 8-9%. And that's a pretty big component. So we'll probably see some more weakness off of that on Monday if it sticks. So things don't always go straight up. We know this. And one of the things that we were talking about the whole way up was don't try and arbitrarily pick a top. Rather, wait for the market to give you a signal. So we have a little bit of a signal. Now, does it mean that the market's going to correct 10% or 6% or 20%? Who knows, right? It's probably just something that we'll have to play it by ear and just kind of take a look and take the temperature of what the insiders are doing. However, when we do get pullbacks, we're going to see stop losses get hit. We're going to see all these things happen. We're going to see probably even if it's a real pullback, we'll probably see a lot of opportunity on the short side to make money as well. So with everything going on, just to kind of give you an example or a couple of reasons, because I know everybody loves reasons on why the market pulled back. A lot of times these reasons are either made up or just really um, looking to answer a question. I think the real reason the market pulled back is that we were overbought and people could take 7, 8, 5% profits for the year. And it's easy to do because it's only been about a month. So when that happens, there's a lot of it's just a lot of dry tinder and any spark could just kind of get it going. So that's where I think we are. But in any event, we had a week, right? And towards the end of the week, this morning on Friday, we had the unemployment numbers come out. So one of the things that they reported in these numbers was that wages were higher. They were actually at their 9-year high. So what happens is when wages are at 9-year highs, people are starting to think inflation. So when inflation happens, the Federal Reserve usually comes in and they raise interest rates to stem inflation. The reason why you want to stem inflation is because inflation is a very bad thing when it goes excess out of control. What will happen in a high inflationary environment is we'll actually get a tremendous amount of price increases. Everything will cost you more: food, gasoline, housing, everything. And the money that you're making is not going as far as it would have in a non-inflationary environment. So yeah, in that environment, what the Fed does is they actually come in and increase interest rates. That increase in interest rates, making money and capital harder to move around the economy, slows the economy down so that wages don't expand tremendously and prices don't expand tremendously. And it really cuts down on the inflation. So the Federal Reserve is between not causing a slow economy and making sure that inflation is not out of control. So they always want that Goldilocks situation. And that's kind of what we had for the past 2 or 3 years. But now we're starting to see a great economy. We're starting to see a lot of tax cuts, especially corporately, in the corporations. And those things are starting to really light the fire under inflation. So that's why we have such a great economy. We're not used to it. The Fed may now hike rates 4 times this year, whereas before this report came out on Friday morning, it was supposed to only be three. So now it's like, hey, four is in play, and if things get really crazy, it could even be five, which would be nuts. But that's kind of where we're at. Market scared, any type of hint of, worry when the market goes up as much as it did in January, leads us to a week like this. So that's where we're at. The other thing that I didn't mention was in anticipation of maybe increasing rates, we also have the 10-year yields approaching 3% on the Treasury bond. And in my opinion, I don't think that's, are you going to not buy Apple that's going up 15% a year because you're going to get 2.79% if you commit your money for 10 years at a treasury bond? Obviously not. But if that gets up to 4 and 5 and 6%, then maybe it actually is an competitor at that point for the overall market. But I just don't think we're there yet. I just think it's more of everybody just kind of getting a little bit crazy as far as, hey, maybe I should take some profits here because of these other factors happening. So we'll keep in touch as far as what's happening with the overall market. But I did find it a little more difficult this week to find insiders buying shares. So that's something where, yeah, I know I found one that was from January 16, um, where I had a successful insider buy shares, and the stock actually went pretty low compared to where it was when he bought the shares on January 16th. So that was good for us because we can get it at a little bit of a discount here. However, I'm going to try and keep the stops tight just in case this market continues um, a bigger than expected correction. And we'll just try and just keep on doing what we do. If we can't find any insiders that are buying, then we won't put any on. If we see insiders that are, selling and getting out because they see some ominous signs up ahead, then we'll look at that as a short opportunity. So I hope you guys have a great weekend, and hope you got something out of the video today. And just to give you a quick look, I know I didn't really change the chart around a lot. I was just talking into the mic here, but if you take a look at the daily, we started out with on the 30th here. We actually had an inside day, and then we started to go lower, okay, all the way down to like 274 or so. So I do appreciate the time. Um, we still have to see where this market leads us, and hope you guys have a great weekend. All right, thanks so much.